Ira Epstein with your Wednesday evening market wrap up for the metal markets, and this is the 31st of August, 2022, about 5:45 p.m. Central Time. What a market. Since last Friday, it's just been a complete leaking of the market. The battle on TV continues on, station upon station. Oh, do we think the June lows are in? No, I think they're going to be retested. Now I'm hearing they can be retested, but a lot of stocks have made their lows. They won't go under that. I don't have the slightest idea. Here's what I think the market's realizing. The Fed made a statement. Inflation numbers look good. I think the market's a little spooked by the JOLTS data that still showed 11.2 million job openings. That's almost 2 to 1 for all the jobs that can be filled. ADP data today at first gave the market a rally because we had 132,000 new jobs versus the estimate that some thought as high as 300,000. But now we got to get ready for Friday's numbers. That doesn't mean we don't get more data tomorrow, but the big number of the week is going to be Friday's jobs report. Then the only thing standing in the way of the Fed after that really is going to be the CPI report. The second week or so of September. So I'll have a better date on that over time. In the metal markets, the weight of everybody raising interest rates, economy slowing down is on the market. When you look at energy, you see that the crude is getting hit. You're back down to $95 in Brent. You were just over 100, so you've been falling back here rather smart. When we take a look at gold on a weekly chart, you can see how the market's been falling down here. You're back into this area of 1713. I point that out because you've been here before, and this is where the market in a zone was trying to get its legs one time ago. On the charts here, lower highs, lower lows. The market's been relentless in the break. You had one day of a rally, intraday attempt, didn't hold up at all, but the market just keeps marching on down. You can see that you're coming in, if you watch this, to the Bollinger Bands. So you hit them, you bounce away, you hit them, you bounce away. It's just classic bearish action, no real change there. And the question is, are you going to develop an embedded reading? So on embedded, you don't look at tonight. You go back to today, which is Wednesday. Both numbers were under 20. They were both under 20 on Tuesday, not that way on Monday. Keep that in the back of your mind. These markets are paying tremendous attention to Bollinger Bands. If you embed, it tells me that on good hard rallies, you've got to be looking to go short, assuming the jobs data doesn't change all the fundamentals. So I wait, and obviously, with the setup you have here, nothing to do for me tomorrow at least. Gold-silver ratio, once you got through this 94 zone, you just took off to the upside. On the silver market, higher highs, lower lows, embedded reading, and it's not giving you the chance to go short. If you've taken my enhanced Bollinger Band course, which I'll have an add-on for it at the end of this, the key is if you're going to get that bounce, you got to get it without taking out the low of the prior day. You don't have it at this point. In the copper market, I wrote and I told people this morning, and it was down hard early on, and I was telling them, I said, each time you've had a big break in copper under it, even if you go for a day, you pop back by the third day. So it's a little dangerous to go short on those big breaks, and that turned out to be the right advice. I don't see a trend. I see a market that is whipping back and forth, looking to decide what it's going to do next. In the palladium market, lower highs, lower lows, just working its way down to lower numbers here. This is the palladium. I don't know why that went up there, but yeah, and it's December, so it's a brand new contract. I've left the other months. Lower high, lower low. I thought we'd have some support in these moving averages as we're attacking them, and you are, but the trend is back to the downside, and in the dollar index, you're back to the upside in all this. So it's still very interesting. If the dollar slips underneath 108.23.5, you could end up with lower highs, lower lows, calling for a potential test of the 18-day average of closes. But the reality of the situation with it is that the market's in the holiday moment. We go on vacation, as you know. A lot of people will be gone once they see the jobs data Friday morning. They'll either make their trades hanging around for what they're doing, and they'll turn off their screens. I've seen this over and over. Yeah, you'll get some electronic market trading Sunday night, Monday morning, but things really don't get back to normal or semi-normal Monday night when we open on the electronic session. Tuesdays when things get back to normal, but real normal. That's the end of summer vacation for all purposes. And traders will be all over this market. They'll have the jobs data under their belt, and you will be getting a tremendous amount of information. Market upon market, as you can see here, are challenging the Bollinger Bands. What's the importance of them? How do you work with them? Take a look at this ad that I've got coming up that teaches you a little bit about what I teach in the enhanced course, Learn While You Can. I'm Ira Epstein. You take care.